Yeah, and tonight we're going to have 3 speakers. And here to give you just a couple of reminders. For our safety, please remain masked throughout the whole duration of the event. The speakers can remove their masks while speaking. So tonight we're going to have 3 speakers. The first one is Mr. Hoss. He's our CEO and co-founder. He is a serial entrepreneur and also internationally recognized blockchain expert. He's going to talk tonight about the crypto market in 2022. Right after, we're going to have
so just make sure nobody touches it.
CEO and co-founder. He's going to talk to us about DeFi. And then we're going to have Nicolas Hu. He's from DeFi Ventures. He's going to tell us all about that later. And he's going to talk about Web3 and gaming. He has a history in the games industry for about 10 years. So yeah, I would say without any further ado, we can welcome our first speaker on stage just for your right after the speech, we're going to have a Q&A session, so you just raise your hand and bring the mic. But if you like a more interactive kind of style of presentation, you can always feel free to raise your hand and ask questions to the speakers. Thank you very much.
Okay, I think I messed this up. Oh, no. Okay. Oh, fantastic. Wow, it's quite interesting to have a physical event in Singapore. Can I understand who is part of or has basically come into the crypto space with COVID? So 2020, 2021, 2022. Show of hands. Okay, who has been part of crypto prior to COVID already? Show of hands. What's with all the rest? You're undecided? Okay, so maybe some of you are just exploring. No? Okay. Can I understand? I mean, we have done a lot of meetups in 2017, 2018, 2016. Who was part of the kind of crypto scene in Singapore back then already? Show of hands. Oh, very few people. Very interesting. Okay. Do you want to reveal who's holding what kind of coins so I get a bit of a yeah, just so I get a bit of a feeling. Who is holding Bitcoin? Show of hands. Ethereum. Wow. Okay. Solana. Binance. BNB. What other coins? DFI. Okay. What other coins do we have? Litecoin? Wow. Really? XRP? Interesting. Okay. Quite interesting. Okay, cool. What I want to talk today, I need to first, disclaimer, this is not investment advice. I will actually share very little opinion. I try to stick with the facts. I try to give you a lot of like really hard, cold facts where then hopefully you can build your own opinion. We're gonna do this in 3 parts. I'll do a bit of a 2022 preview. I'll talk a lot about crypto in general, and I think a lot of, as you probably know, a lot of crypto in general is going to be based around Bitcoin. So I'll start with Bitcoin. What are the price drivers for Bitcoin in the past? What do I see as possible price drivers, bullish, bearish, sideways in 2022? And then I'll finish platforms, DeFi, NFTs, Metaverse, but these are things where u-zyn and afterwards really goes into the nitty-gritty part, and then in the side where Nick is gonna cover that a bit. If there's questions, I actually don't like doing a Q&A at the end, we can do it, but I would shoot your hand up if there's a question to something, or you just shout out a comment, and then we can have a bit of a dialogue. I would really very much prefer that. Great. 2021 forecasts have been all over the place, right? We've had forecasts from Peter Schiff, Bitcoin's gonna die in 2021. And we've had the forecasts where people said, Bitcoin's gonna go to 500,000, 288,000. I mean, I think you all kind of know the models. Stock to flow model, 288,000 was the prediction. Then Plan B had a floor model that predicted 135,000 in 2021. Then we had all the blockchain analytics, inflows of the exchanges, outflows of the exchanges, stable coins, what's happening there, unspent transactions, life cycles, all these. And I mean, I think you kind of know where this all leads. It doesn't matter if you're at the analysis, Bitcoin is mooning, buy now, this is your last chance, all the way to we're going to crash. At the end, what all these models, literally every single model in 2021, even, and this is a question that was posted September 11th, when Bitcoin was at 40,000 approximately. Plan B asked this on Twitter. So, if you don't know, Plan B is a really, really large Twitter account who came up with the stock to flow model and then with the floor model and asked, what are the odds that Bitcoin is going to hit 100,000? And the majority said, yes, it's going to do it. Sure, there's still a part that said, no, it's not. Just think about this. There were people voting for 500,000, people voting close to 250,000. Right? In September, with about 3 months left. So if we say making any kind of forecast is hard, then it's especially true about the future, and it's even crazier in crypto. This is just a chart that kind of shows the craziest forecasts over the various years, and they range all the way from Bitcoin's going to get to $10 million all the way down to here, quite famous Peter Schiff, who's going to say, this is just going to die. So quite some interesting things here. First of all, 99% of all the predictions are wrong, and that's why I'm definitely not going to try to do any predictions today for 2022. I think that's absolutely unreasonable. Also quite interesting is, whenever there's a new all-time high, prices or forecasts tend to be extremely bullish, which makes sense, right? That's crypto. Crypto is driven a lot by emotions. And so that means after all-time highs, forecasts tend to be way too exaggerated. But in the other years, forecasts tend to be way too pessimistic. And we have seen this. For example, 2017 and 2013, the forecasts were way too pessimistic, where people never ever dreamed of Bitcoin getting close to 20,000 in 2017 or 1,200 in 2013. And when I got into the crypto space in 2014, 8 years ago, it was the complete opposite. Everyone was expecting for Bitcoin to die and this is going to be the end. Bitcoin had just dipped to $250. So it's going to be quite interesting to kind of judge that a bit and see that a bit. And at the end, we know how 2021 turned out. It was definitely a green candle. We finished the year close to 50,000. We started the year close at 30,000. So all those who said, it's going to go to 100,000, 288,000. Yeah, all of them were right with the direction. But I mean, some of these predictions were as wrong as it can possibly be. So what is my kind of right here to say 2022, we're going to talk about bullish, bearish, or boring. I'm saying, well, famous last words, this is a different approach. So let's see what this different approach is. Well, the point is, I think most people actually invest in a price. That's all they care about. They look at a ticker and they ask themselves, is the ticker going to go up or down? So they buy Bitcoin at 50 and all they care about is selling it at 60 or not it down to 30. But here is a very important thought that I really want to give you. Just think of the last 1.5 years. You may have predicted a few of those events, but never ever would you have predicted all of them. Just to kind of highlight the really key ones. The entire COVID money printing. Okay, some of us saw this coming in 2020 when central banks stepped out, but then 2021 saw Tesla and Elon Musk coming out, first shilling Bitcoin, afterwards kind of dumping it a little bit and it going down. Who saw El Salvador last year? Who saw the China Bitcoin mining ban? Who saw the Bitcoin future ETF? Then the Fed tightening in 2021. Then we had the stock market correction. Who saw the entire DeFi hype, the NFT hype, the metaverse hype? I'm sure some of you gotten of those, but this is not enough. It would have completely put you on the wrong side of a bet if you would have started making crazy price predictions on that. So I'm not actually trying to make price predictions today. What we're going to do is we're going to take good old Warren and not listen to him about his opinion about Bitcoin, but actually listen to him about his general philosophy, which is don't invest in a price, value, which is very common sense. And now we can have an endless discussion on what is value. But if you actually think about it, what is value? It's not a difficult question. You just have to think it through. It's actually a function of three things. It is utility of something, how rare this utility is, and how many people need that rare utility. That's the entire function. It applies to anything that we have in this world. Air, insane utility, but because it's not rare, even though everyone needs it, you don't really pay for it. But if it suddenly becomes rarer, and we have seen the toilet paper things over the past 2 years suddenly become rare, which prior to 2 years ago no one cared, it completely changed the entire value formula. There's a couple of thought points I want to give you here. First of all, if you understand this, then you understand that nothing actually has inherent value. So when someone says there's an inherent value or it's backed by something, at the end, anything that you call backed by something, you call backed by three things: that it has a utility to someone, it's rare, and the more people actually need this rare utility, the more valuable it becomes. That's what backing actually is. There's no backed by. There's no inherent value. The other key thing is always what triggers me when especially Bitcoiners go out and say, oh, Bitcoin is valuable because it's rare. That's absolutely incorrect. You could run color coin on top of Bitcoin where there's a single coin on top of Bitcoin. So that color coin would be secured by the Bitcoin blockchain. And there's just a single coin. You can't split it. There's just one of them. How valuable would the single coin be? So it's not about rarity. It's really, that's the key thing. It's all utility. That leads everything. Something that has utility, it's not going to have any value, no matter how rare something is. Don't confuse rarity and scarcity. Once on Twitter, I was corrected. So I just wanted to highlight that. Scarcity is basically a function of rarity times how many people. But the two things I actually want to get into is that it's really, really difficult, especially in Bitcoin, to give it an absolute value. So it's very difficult to actually say what's the fair value right now for Bitcoin. It's easier to do this for something that cash flows. We have discounted cash flow analysis, and that's why Buffett, for example, always says Bitcoin has no value because you can't put a DCF to it. But what you can do, and that is kind of the thought experiment I want to do together with you today, is you can think about a relative value change. So you take 2 points in time, for example, the beginning of the year, and you analyze this down the year with various events, and you ask yourself, how does the entire formula here of utility, rarity, and people change? So let's try this. Let's start with this concept of understanding the first part, which is the utility part. And let's think this through. Now, I understand that this may be hard, this may be uncomfortable, because maybe you want from me that I'm just gonna give this to you, and I know that that's what works so well on YouTube, where people just sit there and tell you, oh, this is what the price is gonna do, and they're gonna cover this, and you click on the thumbnail, and then you're gonna watch the video. But we are not gonna do this. We're gonna focus on 3 questions. And these are the questions that I really would ask myself this year especially. What makes any coins, we're going to start with Bitcoin, we're going to do it with other coins as well. What makes Bitcoin's utility go up or down? We're going to ask ourselves, what makes the rarity go up and down? And you might say, well, and we're going to talk about this, well, a coin normally has an algorithmically defined rarity because we have the function that Bitcoin, how many Bitcoins get kind of claimed. We can do this for other coins as well. There's actually another point, which is the dollar. And we look at this. Then, what is people? More or less. So, let's do this. Let's start with the very first utility that Bitcoin kind of achieved. And that was a very illicit activity. It was that activity of paying for drugs, especially on Silk Road. And that was kind of how Bitcoin got its very first use case. No one really cared about how rare it was. Yes, I understand that on Reddit people talked about this, but the real value in Bitcoin actually came from people using it to pay for things that they couldn't pay for credit cards, they couldn't do bank transfers for. And at the end, it kind of died off, especially when Silk Road got shut down and more exchanges, more and more platforms asked for KYC for all these compliance checks. So this illicit activity really kind of went down. And when we now look, and this is from Chain Analysis, large compliance tool, we look at how many percentage today Bitcoin is actually used for illicit activity. We're at 0.15% of transactions. If you're comparing this to fiat, regular dollars, this is in the single digit percentages. So fiat is used 10, 20, 30, 40 times more than Bitcoin for illicit activity. So if you think that the main utility for Bitcoin is illicit payments, you couldn't be more wrong. It's actually become the total opposite. And when you see how many people get caught for illegal activity, it's as clear as can be. So it's definitely not illicit activity. So what is that utility? Well, regular payments. Maybe Bitcoin is used for regular payments. And every time we see these amazing numbers where people go out and say, you know what, billions of dollars get transacted, Bitcoin is becoming this major thing for payments, the Lightning Network and so on. But if you actually look at the data, Bitcoin is orange. This is just forecasts, and these are not forecasts that materialized. But if you compare the orange kind of bar here, yes, Bitcoin here, Q1 2021 overtook PayPal. But if you compare this to MasterCard or Visa, Bitcoin is still super far away. I'm not saying Bitcoin is not going to get there. I'm just saying if you think that right now the main use case, the main utility for Bitcoin is regular payments, I want you to consider two things. First of all, it's a super tiny amount in the overall use case. Plus, most countries, El Salvador, for example, and most companies that accept Bitcoin, they don't actually accept Bitcoin. They accept dollars or euros, and they immediately convert those Bitcoins back. I think the statistic is that about 2 to 3% of actual payment transactions in Bitcoin actually stay in crypto. The others immediately get converted. So it's actually a net zero kind of utility function, if you want to call this. I do think, though, that over time, this is going to be a really important part, and I'm seeing everywhere, that the payment utility is going to get larger. The point I want to make here, we're talking about 2022, is how much of this utility is going to go up in comparison to the beginning of the year, right? That's the question you want to ask yourself. It's definitely going to go up, in my opinion. That's my subjective opinion. But I'm not sure, is this going to go up by 3 times, by 5 times, by 10 times? Is this going to justify a price increase from Bitcoin by, I don't know, 100% this year? I'm not sure. A couple of other things I want to point out here. If you have been following regulation lately, and you may have heard that, for example, Europe is really trying to cut down on the regulation. We're going to talk about Singapore. Singapore has also stepped up with the FATF rule and regulation. A lot of people, especially in the crypto space, are now talking about privacy coins, mainly Monero. I want to bring up one point, though. The Lightning Network on Bitcoin has actually very strong privacy-like features. So that's a bit of a counterintuitive thing for the regulator with Bitcoin. But here's the main point. I think most exchanges are going to really struggle keeping Monero or other privacy coins on their platform. Dash, for example, who the years back really tried to promote themselves as this privacy coin, completely backpedaled and went into, no, we're not a privacy coin anymore. So I do think that Monero, Lightning, all these features will have strong use case, but I would be very careful in believing that because of this regulation, these prices will gain in massive utility. They're simply going to struggle getting access to any kind of centralized platform. That's just a personal thought here. If you think that a reserve currency with Bitcoin is going to happen in the next 1 or 2 years because the dollar is getting inflated away, the value of the dollar is going away, I would highly kind of recommend to think how fast something like this for a reserve currency to move from one into another takes. Ray Dalio has a really good book out, Principles for a Changing World Order. I can highly recommend this. And I mean, in there, he talks about this taking decades, right? And it really is going to come down to one thing. When is actually a country going to price its GDP in Bitcoin? And we're far away from that. I mean, El Salvador right now is pricing it still in dollars. Yes, they're accepting Bitcoin, but we're super far away. So again, if people say, oh, Bitcoin is going to be the next reserve currency, I think it's actually possible, but not in the next 10 years. I think this is going to take 20, 30 years. I think the US is going to deplete everything else before they would give up their reserve currency status, right? So if this is the bet you want to make for 2022, Bitcoin reserve currency, I think it's a very tricky bet. And the last one that I just want to mention here, don't get tricked countries starting their central bank digital currency, CBDC, and believing this is like Bitcoin. Again, it's always going to come down to utility. What's the utility for you or for me of a central bank digital currency? I tell you, 0, because we already have digital money. If I want to pay something in Singapore digitally, I can use PayNow. I can make bank transfers that are insanely fast. I can use a credit card, a Visa card. I understand this works in the first world countries. But again, I'm talking about Singapore, I'm talking about Europe, I'm talking about the US. So the real utility for CBDCs is actually for the country. Because the country, the central bank, is cutting out the middleman, in this case actually the banks, and has a direct relationship with us as a customer, which can be interesting if the country wants to incentivize us with inflation and gives us free returns. Can be very stifling if they try to censor us, if they try to shut down our accounts, if they try to shut down privacy. So I would be extremely cautious on CBDCs in general. I think these are every kind of dictator's wet dream, but I think it's quite a bit of a tricky aspect if you see this from a country standpoint. If there's an exception to that, if the country doesn't start some privacy function in those CBDCs. So I kind of wanted to point that in there. Please.
So when it comes to CBDCs, right, it's that trend. Because I know it's not cautious and nobody really is waiting for it.
I think the question is fantastic. I'm just going to repeat it to everyone here. What's going to stop that trend? Because they're pushing for CBDCs. I agree with you. I really think it has to be the revolt. I actually think, and so many people are so scared of CBDCs, but I actually think Bitcoin is the best about that, because people will actually get educated about cryptocurrencies, and then immediately they're going to see the downsides when there's one party has all the control, and then there's this other coin that people can jump into, and they're like, okay, great, I understand it here, let me jump over there, and no one can stop me there. So, I don't know, I always believe, I say this a lot, I believe freedom is not having 10,000 options, it's not being forced into a single option. That's why Bitcoin is so important, that it gives me this escape route. So I don't know, if you have a better idea how to stop it, I would promote it, but I really don't. I think it's going to be inevitable, and I think we just need to keep our options open so that those governments that try to use this as a domination tool, they're just going to basically get punished by people escaping into other avenues. Okay, so if it's not so much payments that makes the utility, let's discuss the point that most people say, including myself, when in 2015, I really kind of got very, very bullish on Bitcoin. In 2016, I wrote a book called Cryptocurrency Simply Explained. Elon Musk was taking a picture with that book. In that book already, I spoke about the cryptocurrency, in my opinion, is a very bad term. I actually like crypto asset way better. And so I always believe that actually the main utility Bitcoin is going to have is that of a censorship-resistant digital asset. It defines everything that Bitcoin is, at least to me. It's censorship resistant. That means no one can stop me from receiving it, and no one can stop me from sending it. Quite important. And the other thing, it's digital, and I see it as an asset, not a currency. The only issue with that actually is, if that utility goes up, the world is going down. There's this very famous scene in The Big Short. I don't know if you have seen this, where it talks about the 2008 housing crisis. And there's this one scene where Brad Pitt is having brown hole capital, and they're starting realizing that they could. And maybe you've seen the scene where in this casino, and they start celebrating that all the banks are selling those AAA tranches to them. And they're like celebrating because they believe that if these things go down, they're going to make millions. And then Brad Pitt has this very famous scene where he says, listen, guys, I don't want to be celebrating. You're going to be making money when the entire world is burning. And so that was such a powerful statement. I always think this actually with Bitcoin. I actually always hope, right? So it's a really crazy kind of thing here. I actually always hope that Bitcoin doesn't need this utility. Because one thing is clear, if Bitcoin gets this utility, I mean, just think of the Ukraine, right? There's so many stories from Ukraine, people really like needed Bitcoin because everything didn't work anymore. And whenever you talk about Syria or Canada or whatever happened in these countries where suddenly there were shutdowns, economic sanctions, instantly Bitcoin rose in utility. Turkey, same thing. So if you sit there and you're like, I hope that this utility goes up, whoa, you have some masochistic tendency, because the world in this situation is not doing well, right? So gladly, it has a limited application on this at the moment. It's like an insurance policy, right? Jamas Palihapitia, very famous VC, and always says it's schmuck's insurance. And I agree. I really hope that utility doesn't go up so much. But I think this is a key one. And so for me, fingers crossed, really fingers crossed, we don't need that this year. You can sit there and you may have a total different opinion, and I think you may be right, that this utility is actually going up incredibly this year. I just hope not. Because if it did, we're really going to be burning. So I hope we can kick that can down the road, and I think at some point it's going to be difficult to keep kicking. So just kind of keep that in mind. I think that utility is strong. I just hope it's not going to happen this year. So we spoke about the utility part. Maybe you know about other utilities. The two that I really know is payments or that of a store of a value. And that's, for me at least, a utility feature. Personally, on the one hand, the payments one, I don't see so much increase. On the utility one, when it comes to asset, I hope we don't need it as much. Okay, am I bearish on Bitcoin? Well, obviously not. I'm long crypto. I'm the CEO of a crypto company. I wouldn't be in this field if I weren't. But I actually am not so much because of here. So let's talk about the next one. Let's talk about rarity. Okay, let's think this through. Bitcoin just crossed the $19 million coin mark. Maybe you have heard this. This is algorithmically defined. Maybe fun fact for those of you that are a bit geeky like myself. There weren't actually 19 million Bitcoins when this block was mined. For a very fun fact, the miner actually doesn't automatically produce the amount of Bitcoins that the first transaction actually makes it produce. The miner has to claim those Bitcoins, and it's an up to amount. And very early in the days, when Bitcoin was worthless, miners just claimed the full 50 Bitcoin block reward. They didn't see the point, and they just wanted to try this out. So that's actually about 109 Bitcoins less than the total cap. Very few people know this, but it's actually quite an interesting function on how the Bitcoin claim feature for a miner actually works. So quite a fun fact. So the thing here is, rarity for the Bitcoin side, it actually doesn't go up that much. Inflation at the moment for Bitcoin, it's 1 to 2%. I'm not sure if this is really going to be the price driver into one or the other direction. You could almost say it's quite stable. The good thing here is that it's very predictable, right? So I don't think that's part of the function that you're going to be so concerned about. So let's talk about the other side, which is the dollar side, right? And you can measure the amount of dollars in circulation. You can measure them in various ways. Generally, you call them M's, which is the money supply. There's always a big misunderstanding on M1, which is the base money supply. And this thing went up by 80%, and people say, oh, M1, more than 80% of all dollars got printed in the last 2 years. This is incorrect. It's just a change in calculation. So whenever you see these pictures of M1, and then people say, oh, 80%, even at the Bitcoin conference, they had this error, which to me is incredible. They had these posters that said there were more than 80% of all dollars in circulation were printed in the last 2 years. Absolutely incorrect. So it's incredible how few people actually understand that. But what really happened, so you can go to M2, and you can actually then see over the past, like this is 2013, this is 2022. So if you look here for the last 2 years, you maybe go from 14,000 to, let's say, from 14 trillion to 22 trillion. So we could definitely say 40 to 50%, but not 80. So that number was definitely incredible. And Bitcoin, if you haven't been completely sleeping under a rock over the last 2 years, went up incredibly a lot. So people tend to forget that just because Bitcoin is down over the last 3 months, think in days and not in years. So if you just think about 2 years ago, when pretty much, I think today on CNA, I think the article came out that I think exactly 2 years ago, we went into a circuit breaker, if I read this correctly, right? So just 2 years ago, if you think about it, it feels like 10 years. So absolutely crazy. And in this time, Bitcoin was at around 7,000 to 8,000. It dropped to 3,000. And today we are at what, 45,000 approximately. So Bitcoin went up way more than this money supply. Now, there is a very, very key part, and I just want to highlight that. If you're now thinking that Bitcoin is a good inflation hedge, you have to be extra careful. Since the point that inflation really started to spike, and actually inflation started to spike after the summer, which was here, and then Bitcoin really started trending down. It had this boost up simply because of a lot of hopium with the Bitcoin futures ETF last year. And then since mid-November, the price really started trending down, which is strange considering that inflation is at an all-time high. So why is this? It is because Bitcoin works really, really well if people... Whoop, my clicker's not working. Dare to be risk on. Which means if they get scared, they don't want to be because it is way too new. And that is an absolute key part that I want to give you because I actually think this year is going to be the main driver. And that's why I want to focus 5 minutes on that right now. I think the utility function is not going to have much an effect. I think the money printing this year, again, I'm not a macroeconomist, I'm not the Fed, I'm not MAS, but I think the money printing is going to be relatively predictable. But the key question is geopolitical tensions, pandemics, how's inflation going to catch up? Is inflation going to get to 10%? How is rental prices, electricity prices? How is this going to do? How is the entire economic uncertainty? And one thing that is really, really interesting is if you put the Bitcoin price over the NASDAQ, so tech, and suddenly you have this really, really strong correlation. And what that just highlights is that a main driver, really a main driver, is the emotions that people actually associate with a really volatile asset based on how they are feeling. And that's what makes it actually so difficult to predict. Because these emotions can swing left or right. If you just look at the chart here, right? This is an emotional chart, and this goes back to all the way to 2018. So obviously started really low, then it super shot up summer 2019, then obviously dropped down. This is here the beginning of COVID, then bam, 2021, and now we have seen a constant trend down again. But that is going to be one of the main things. And so from there, I want to lead to a couple of questions where I want to be honest, I don't have the answers. But these are the thoughts that I want to give to you. If we see this year either super high inflation, or we even see deflation, which is the exact opposite, we may really, really struggle with Bitcoin. If we see stagflation, which means we see an economic recession with inflationary prices, if you look back, when was the last time the world saw a bit of a stagflation? 1970s. Gold did really, really well during this time. So it's going to be very interesting to see how is Bitcoin going to do during this time. Honestly, we don't know. There's a lot of people, and me included, who thinks Bitcoin could do well. We have no data. And opinions don't matter. Results do. And I cannot look at the results because we don't have any. Bitcoin is too young for that. But that's an interesting concept. So I just want you to kind of think about that. Another question I want you to think about is if you hear this in the news that we had this so-called yield curve inversion. That means the 2-year bond pays more than the 10-year bond, which is very counterintuitive because normally the longer you lend money away, the more money you want to have in return. So normally the 10-year bond would yield higher than the 2-year bond. And then most people say, whenever this happens, so either 2008 or dot-com bubble, whenever this happens, we have a recession. And so many economists out there, so many doomsday players, they're like, yield curve inversion, we're going to crash. And the good thing here again is we have data. So if you look at the data, whenever we had an inverted yield curve here, we actually did have many, many times a recession. But be careful. Recession took way longer. Let's take out the COVID recession here, because that was, quite, I think, an unpredictable economic event. It takes quite long, 18, 11 months, 20 months, 35 months, 25 months. It takes, on average, 19 months until the actual recession hits. And so the reason I just want to bring this out, I have no clue if we're going to see this again this time. But so many people right now are predicting this recession that's going to come in the next 3 months. Everything is going to crash. Everything is going to go down. And if you now sit there and you get all cautious and you go on the sidelines, and then suddenly the market starts rallying because actually the data that's what the data suggests. I don't know if this is really going to happen. You may get caught in the complete opposite direction here, where you're going to be bearish when everyone should be bullish, when you should be bullish. And then when everyone is starting to turn bearish, you're going to have FOMO because, I don't know, maybe Bitcoin did rally to 100,000 this year. And then you're going to go all in. And that's actually the exact wrong time. So again, I have no clue. I just want to present to you data that just hopefully challenges a bit your decision making here. Two parts I want to mention that greatly drive emotions. The first one is regulation. We have seen an increase in regulation all over the world. Doesn't matter if in the US or in Europe. Also Singapore. I think at the moment Singapore is still on a point where it's not overdoing it, where it's not underdoing it. Yet, us as companies, we have to adjust. But I think at the moment it's still reasonable. I think most countries in the world are going to kind of follow suit with most jurisdictions. And I do think we're going to see over the next couple of years a separation of systems where one system is custodial. So this is exchanges, platforms, where this works similar to how a banking system works. And we have a system which is non-custodial, which is where you control the private key. And these systems are not going to be as interoperable as they are today. Similar as if you are trying to transfer, let's say, $100,000 and you transfer this from DBS to HSBC, yes, you might get a question from your banker, but generally it's not that much of a big deal. However, if you come with $100,000 cash to HSBC and you tell them, yeah, I withdrew that from DBS and now I have this cash and I want to deposit it again, this may cause some issues. And it's going to be probably similar in the crypto space. So mentally prepare yourself for that. Here's the thing. If you're following YouTubers or people on crypto, they're going to call this is the end of crypto. This is going to be the end of everything. I heard the exact same thing in 2016 when most exchanges started with KYC. Up until that point, only the US exchanges that kind of where you had to verify yourself. All the other exchanges didn't really do that. And it was only in 2016, 2017 when most exchanges started with that. And everyone said, this is the end. This is the end of crypto. And you know what happened. I mean, today we are 50 times higher than we were back then. And I think exactly the same here. The only thing you want to watch out for, this is important, once countries start overdoing this, right? Where it becomes almost impossible to onboard customers, where customers are going to have almost an impossible time actually converting their dollars into crypto or their crypto into dollars. When companies get completely debanked, that's when it's going to get tricky. So that's what I would want to watch out for. It's not really what we're seeing. So just kind of keep that in mind. But this really drives emotions. So this always is going to cause a little bit of an effect. And the last thing that really drives emotions, and I actually see this getting stronger and stronger, is the environmental concerns, mainly around Bitcoin, obviously, with proof of work mining. I don't want to go into this super long debate. Let's just, again, look at the straightforward data. And I don't want to talk about, is it worth to spend all this electricity? Because I actually do think it is. Yes, it should be all green energy, I get it. But let's just look at the data here. So if you actually look at the energy used and the economic cost, red is the banking system, gold is gold, white here is paper currency and any kind of minting of fiat, and the little blue line here is what Bitcoin on the economic cost. If you look here at energy used, Bitcoin is around on par with gold, but it's still way smaller than the banking system. If we go, and now this is where it gets very interesting, this is one side of the coin. Let's look at the output CO2 emissions. Again, you can look up the data here yourself with the reference link. This is banking system output in CO2. Interesting, no one talks about this. This is paper, this is gold, and this is Bitcoin. Yes, Bitcoin is slightly higher than gold, but just compare those two. This is going to be a very strong focus point, especially from Bitcoin like critics. This is going to be a strong focus point from countries that really kind of try to attack Bitcoin on all angles. But this is just going to be something, just like when people come, oh, Bitcoin is only used for illegal activity. This is something that you have to fight with data, and you really have to fight that narrative. Great. So let's finish this up on the general crypto side. A couple of thought points, and then I quickly want to talk about what's happening on layer 1 platforms, what's going to happen with DeFi, NFT, and so on. So a couple of questions for this year that I would add to those 3 questions. Do you think people are willing to go risk on this year? The more you're going to be willing to be risk on, the stronger the Bitcoin price is going to go up. Do you think people will have access to liquidity? How much do you think regulation and environmental social governance concern going to affect the entire decision-making that people have? There's going to be one wild card, and I just want to throw that in here. There's a Bitcoin spot ETF. So far, pretty much all ETFs that were based on spot price got shut down. An example, why Bitcoin futures ETF approved? Why did the spot BTF not get approved? I wanted to paint a picture to you. It's not accurate, but it's kind of the same. imagine you have this regulated weather station in Singapore where you can bet on what's the temperature tomorrow. And that regulated weather station is quite accurate on what's the weather tomorrow. So we can bet on the temperature. But if we now try to invest into temperature, it gets quite tricky. Because what does this mean? Are we investing into cold or warm air? What are we really investing into? And Bitcoin has this similar issue where the futures work because we have the Chicago Mercantile Exchange that has a regulated price. So we can bet on that price, which means we can bet on futures. But only Bitcoin is where it gets a little trickier. That's where the SEC, in my opinion, completely incorrectly, but I'm not the SEC, has an issue with, because we would have good solutions. But their main argument is really around and everything around. It may change actually next year when exchanges could really face more and more scrutiny in the US and become regulated. Coinbase wants to go this route. If Coinbase becomes an actual regulated exchange, there's going to be very little reason for the SEC to actually not approve an ETF. If you want to see some calculations on this, there's actually, as for most things, a price. In this case, it's the discount of Grayscale Bitcoin Trust. At the moment, that trust trades at 24% discount to the actual underlying asset. And most people say why there's this discount in. It's simply because it's not liquid. So this discount would immediately disappear if it was a spot ETF and not a trust structure anymore. But obviously, if that hope for a Bitcoin ETF to go up, that discount should be trending up. So if you see this discount, you can just go to, I think it's on Y charts, just go to Y charts and look up, or just Google the GBTC discount chart. If you see this trend going to zero, obviously people seem to know what's happening. So insiders are going to have some predictions there. So that's kind of the mathematical calculation there. So summarizing this is my bullish kind of analysis for Bitcoin. Obviously, bullish for Bitcoin, anything that's risk on. Quite straightforward. So as soon as people are like, let's go gamble, let's go YOLO, that's, I think, very, very bullish for crypto. The Fed, that's going to be really, really important. The Fed play this year, I mean, they said they're going to raise interest rates. So that is going to be quite interesting. If they manage to normalize inflation, super bullish. If they overdo this, and we're either going to see deflation or they don't do it enough and we're going to see hyperinflation, even though people think Bitcoin is an inflation hedge, it's not really if people get scared, because that's still going to drive it more. So that's going to be a very, very, very important factor. Geopolitical tensions, if they start easing, the Ukraine conflict suddenly gets resolved, that's good. Bitcoin spot ETF, very, very good. Large companies or countries going into Bitcoin, of course, that's bullish, even though maybe not right away for the value, but for branding and for the long-term success. And then you have, and I just want to point out two things here, always an up and downside, which are these large buyers that really buy up a lot of Bitcoin. We have seen one for the past 1.5 years, which is MicroStrategy. I'm going to give you a little bit of a thought here. One point I really would pay attention to is at the moment the Terra Luna Foundation that's buying, I think every day, I think over $100 million in Bitcoin. Just be really, really cautious on how much of a long-term sustainability this buying has. A lot of people, including myself, actually thought that this was going to have way more of an effect on the Bitcoin price. So it may not have so much an effect because maybe they don't want the price to go up, which makes sense, or because they just can't have the same kind of buying power than we think they may have. So be careful. If you see this now, the price is going up, and it's only going up because you have this one large buyer in. For example, one counter example here, MicroStrategy, for the very first time, started to actually leverage on their Bitcoin holdings. While a lot of people started cheering when MicroStrategy did this, so basically they committed Bitcoin with Silvergate Bank, and they took a loan against that Bitcoin and started buying more Bitcoin with that. I mean, a lot of people started cheering. They're like, wow, this is so awesome. But I mean, just think about this if this goes into a backward spiral. Fingers crossed it doesn't, but just think about that, right? Large buyers, always exciting when the price goes up, always horrendous when they have to offload. And yes, they always say, oh, we're never going to sell. Really? Like, there will always be a point when there is going to be this point. And it could be that, I don't know, the SEC says companies are not allowed to have Bitcoin on their balance sheet. And then it's gonna, it could go really, really quick. So just be really, really careful. At the moment, all this is super bullish, but I would just have a bit of a cautious view on that, even though at the moment it looks good. Bearish, anything that's risk. Stagflation, deflation. Stagflation, deflation, I think that can be very tricky. In stagflation or deflationary scenarios, what really is going to work is cash flow, cash flow, cash flow. You have seen this over the past 3-4 months. The companies with really, really strong balance sheets, really strong P&Ls, they did extremely well. Regulation, ESG concerns, and then obviously the two major black swans that we could have. A Tether implosion, we don't know if Tether is backed, and if you have a malicious Satoshi, no one knows who Satoshi is, so that's always a kind of dangerous thing. One food for thought I want to give you at the moment, so far the year has played out quite neutral, is I think we're going to see more and more investments into Bitcoin-related companies. The Coinbases here, this is a chart for Coinbase. Orange is the Bitcoin price. Purple is the Coinbase price since its IPO. That was until the end of the year. Coinbase has slightly outperformed the Bitcoin price. I actually do think we're going to see a similar trend. Bitcoin miners, they are here, Riot and so on. They tend to do a bit worse against the Bitcoin price, but they are way more stable, especially in sideways pattern. Those companies that can actually really monetize Bitcoin and the customers better, they tend to do better. So if you're just thinking about Bitcoin less of a hedge, more of a pure investment, think about actually investing into companies that actually deal with Bitcoin. I think this could be an interesting approach there. Great. Then let me finish with everything else other than Bitcoin. Let's go through layer 1 platforms. Let's go to DeFi, NFT, and then finish with the metaverse. Just going to scratch those topics. I'll give you a couple of thoughts. What's going to influence the price this year on these things? And then we're going to hear from u-zyn and Nick way more detailed on various ideas. So layer 1 smart contract platforms. I think 3 main price factors. Obviously, Bitcoin, that's the general direction. I think it's super difficult for any project to outperform the Bitcoin price if Bitcoin goes down. I think it's just always difficult. Utility is going to be the main driver here, so that's very different to Bitcoin. I really think, and I'm like, if you look at Terra, the reason why Terra outperformed Bitcoin this year was really because they spiked up their utility. If you look at DeFi chain, the reason why DeFi chain is up against Bitcoin, I think close to 100% here, is really because they increase in utility. So utility is really a main driver. But obviously, I think there's one major wild card, which is if you have a Bitcoin spot ETF this year, I think Bitcoin is going to suck the liquidity dry of many, many coins. So just kind of keep that a bit in mind. If you're like totally bearish on Bitcoin and super bullish on everything else, there is this wild card that Bitcoin really has going for itself. I do think, though, it's almost the only one that Bitcoin has for it to be a Bitcoin reason. I really want to be clear. Great. In general, the coins really have a super high correlation. That's an Ethereum coin correlation. So if you look at this against Bitcoin, I mean, they're just super, super correlated. So again, if you believe that a coin can constantly outperform Bitcoin, very, very difficult. You want to have some positive momentum. So again, that also is really strange to me when I see, like, I don't understand the Bitcoin maximalist at all. I also don't see that those people that want to shill their own coin, and that's why they are like really dissing Bitcoin. I just don't understand that sentiment. I mean, none of the other coins are going to have a chance if Bitcoin is not going to get a chance. So I don't know. Sometimes I feel like people try to cut off the right hand and forget it's still their own body. So I think that's important. Cycle-wise, a lot of people talk about that the Bitcoin cycle is now ending, the Ethereum cycle is ending, and that these cycles are always a bit shifted. So right now you want to be in Ethereum and not in Bitcoin. I actually don't believe much in this cycle. Just like I mentioned, we're not investing in a price, we're investing in the real world. And macro is really kind of setting the tone here. As I mentioned, who predicted the last 2 years with all these various events? I could not have. So I'm a bit skeptical if people kind of correlate that. I think if you look at Ethereum, most smart contract platforms, DeFi, NFTs, Web3, DAOs, they're going to be major utilities. So I would really look at, especially if you're investing into those layer ones, how is the various DeFi sector doing? TVL has gone up dramatically even this year. So we have done quite well there. And obviously any utility here, DeFi chain, decentralized assets, it's one of the reasons why the DFI price against Bitcoin has been so insanely strong, right? It all comes down to utility there. But all the other coins did the same. NFTs, the second really large use case that we see on all these layer one protocols. I think at the moment, to be really frank here, I would be a bit cautious on the NFTs because we do see a bit of a cycling from invisible rocks to actual rocks to Bored Apes to, I don't know, Awaken Apes, to real world use cases. And I think it takes a little bit. And that's why, especially this year, NFTs have been really, really struggling. So I think it's going to take a little bit, cycle it out, and then it's going to go back up. One thing to watch out for, I think, is going to be those layer 0 protocols. Basically, the idea here is you have these layer 1s blockchains, and then you have those layer 0s that are kind of latching on to those other blockchains. I would really pay attention to that. I think we're going to see a strong push for these this year. So it's all about utility there. DAOs, I'm sure most of you have heard this crazy story from Laura Shin. Many of you, including myself, probably know or knew Toby Hunish. He was actually in Singapore. I don't know where he is now. He was supposedly be that hacker of the DAO in 2016. Again, I know that there's a couple of lawsuits now that are going on and try to figure this out. To be honest, the crazy thing is that hack actually destroyed all the decentralized autonomous organizations. Now this year, we kind of start seeing this again, especially with GameFi, with real world projects. So let's see, I mean, this entire kind of ecosystem is really spinning up again. Could be interesting. Let's see how this is going to turn out. And one last thought I want to give you here on the metaverse. Metaverse, again, is nothing else than blockchain, Web3, and you combine that with virtual reality. I don't understand how Web2 companies like Facebook or Microsoft or Samsung are going to be successful in the metaverse. I don't understand that because by definition, they're not decentralized. So I actually think the metaverse is going to get built by blockchain communities and not by these companies. That's just a bit of a personal thought there. Yeah. And finishing, just if you start investing in the metaverse and you're spending $650,000 on a non-existent yacht in the metaverse, give me the $650,000 and we buy a real yacht out there. So, sure. Great. With all that, I hope with all the price and all the getting rich with crypto, we don't forget what crypto is really about to do. It's really about helping people that sometimes get excluded out of the real banking system, brings that utility in, and yeah, that's kind of what I want to close with. Thanks so much. I'm going to hand it over to my co-founder, u-zyn. What do we need to do?
All right, well, set the stage really high now.
Wait, I need to give that to you. Maybe put that in because it's for the YouTube stream. Put that in.
Okay. Thanks.
I'll just put it in your hands here. Okay.
Sure. Thank you. All right. All right. Hey, everyone. All right. All right. Hey, everyone. Wow. Wow. What a turnout. What a turnout. Let me take off my mask. All right. Yeah. So, yeah, what a turnout. Yeah, I'm u-zyn. I'm the CTO co-founder of Cake DeFi along with Julian. So, yeah, he set the stage really, really high for the talk. Let's hope I can do somewhat okay there. So yeah, I'm going to talk about what is DeFi? It's a very boring topic, but I want to make it a little bit more exciting. So let's start there. Okay, disclaimer, you've seen that, so I'm gonna go to the next one. Okay, DeFi, simple, decentralized finance. I think everyone attending here knows what DeFi is, decentralized finance, simple enough. So I wanna bring us a little bit back to the early days of crypto, to the early days of Bitcoin. Let's play a little game here. Yeah, let's start with, let's put up your hand if you have been in crypto or Bitcoin since before 2020. Okay, leave your hands up. How about 2018? Before COVID? Oh, it's a lot of hands up. 2015? 2013? Oh, Kenneth, good. 2012? Okay. 2011? Okay, I'm showing my age here. 2010. 2010 is where I started. 2009, where kind of like late 2009, I got into Bitcoin. 2010 is where I really explored deep, and I got into building stuff on Bitcoin. So I want to set the stage a bit back to 2010. So I think it's all the crazy world of Web3 today. So go way back to get a feel on how it's like in the early days. It's a bit of anarchism, like a whole libertarianism going around there in the early days. The whole feel is very, very different today than what's back then. Like all of us getting into the space, it was a little bit of a. Personally, I'm a cybersecurity enthusiast, so I got like a hacker community and all that. So that's why I got into Bitcoin in the first place, and all of that's why it kind of like looked like a lot of crypto anarchism and a lot of people who really want to change the world in a very different way, in a nerdy way, and all that. So that was kind of like the mood back then. So let's go back to 2010. I just Googled what's the top track of 2010 that this came out. Yeah, I'm pretty sure you have that in your head right now, how this song sounds like, right? Okay, so yeah, this is just a slide from the early days. I don't think we have to go through that because we've talked about it, but this slide doesn't mean much anymore today because everyone knows about Bitcoin today. So this was a talk that I gave back in 2012. It's an opening talk on GeekCamp. So this blogged about it on the experience. So I gave the opening talk on the topic of my talk is why Bitcoin is safer than your bank. So you can see the anarchism there kind of showing up a little bit like, yeah, I believe more in Bitcoin rather than bank, right? So yeah, and I had that slide there. And this is from the slide itself, circa 2012 when I gave that talk. Bitcoin was USD 15, it was Mt. Gox. So you can get a feel there. I think when I first bought my Bitcoin, it was $6, I think, yeah, around there. Yeah, so so set the stage back to, okay, let's remain in 2010, but talk about DeFi. DeFi, I think as a term, starts in 2018, 2019. And that's where DeFi started in 2019. I think the term is kind of like float around in the VC space and around 2018, 2019. I think that was like, I kind of like we heard about it. But I think that in general, DeFi doesn't start then. Just like Web3 today, it's like so big today, but Web when it started I think around 2015, where it really started. There's proof of that. Like for those of you in Ethereum, you can see how Web3 as a term came about. So DeFi actually starts from Bitcoin, the Bitcoin, global DeFi, begins in 2008 with Bitcoin. So according to Wikipedia, so what is Bitcoin? I just want to define a little bit on what is DeFi here since we're exploring that topic here. So Bitcoin is about, the keyword is decentralized digital currency. The decentralized is one key thing where it's not controlled by a single entity or any group of entities. It's just anyone can get into the network, can do anything you want, and basically how it got started. It's digital currency. So that's the key thing here. And again, so back in 2010, I just want to remind everyone also to get you like back in those days, kind of get a feel on how it was like back then. So 2010, there was the largest exchange back then. Yeah, and it was kind of the only mainstream exchange back then. I started before when Mt. Gox got big, so we were trading on IRC back then. And then when Mt. Gox happened, a lot of us switched over to Mt. Gox, and we were trading on Mt. Gox. So it's quite fun days. No KYC in the early days, and then they started KYC. I think around 2013. I think 2013. Yeah, right a year or so before they went bust. So yeah, so this Mt. Gox large exchange in around 2010, 2011. That's when it got big. And I remember this one, alpaca socks. I heard no laughter, so it's probably the dinosaur here. But there was if you look in the early days of Bitcoin, there's a video that always talk about what is Bitcoin. This in one of those video, like you can use Bitcoin to buy alpaca socks, and yeah, it's cheap, like 5 Bitcoin. Yeah, back then it was cheap. Yeah, but today it's like, I don't know, you can buy a house with that. Yeah, and local Bitcoin, like, you know, I bring this one up is to also kind of, okay, this is a new screenshot, I think. Yeah, it's like 62,000 Canadian dollar. Just Google it and just put it in here. But back then, I think even in 2010, around that time, local Bitcoins were already happening. So local Bitcoin is, I think it's very interesting in a way that it's not centralized. It's a site. You go there and you meet your fellow traders, and you're going to go meet them in person to kind of like pass your cash, and then you're going to send to your Bitcoin, or sometimes they do a bank transfer. So it's kind of like decentralized finance. If you look into the definition of finance, it doesn't have to be smart contracts, doesn't have to be about like DEX and all that. Like even meeting people outside to transact in Bitcoin. That's DeFi, right? It started back in early 2010. And Satoshi Dice is it was the original screen, as far as I remember. It's a gambling site where you bet on what, it's called Satoshi Dice because you bet on what the next is going to be block. So it's just imagine like Satoshi's ghost is going to roll the dice for the next block. So you bet on the number for the next block. So the original was pretty scary, and then they changed it to a more friendly one. But it's quite big back then. Once it's got up, I think in a couple of months, Bitcoin blockchain utilization got, and I just fill up the blocks because people are betting this a lot. It's one of the fun things to do in the early days. And yeah, Silk Road. For some reason, Julian had this in your slide, so I didn't see Julian's slide, and I thought it's going to be pretty controversial to have it on mine. And then I saw Julian have the screenshot of website. Like, I wanted to do the screenshot, like, is that too controversial? And I only show the logo. Julian just showed the whole thing. Yeah, so in the early days, yeah, so these are the cool, the key ecosystem around Bitcoin back then. So Silk Road, I think we all know what that is. Vervox is also, I kind of like trade a little bit there. So it's where, in the early days, Metaverse as well. So Vervox is the biggest exchange for Second Life was really big back then. So again, Metaverse, like the whole thing's going full circle again. So Metaverse was big back then. Then the dollar was one of the online currency back then. So people are trading for Bitcoin to get out, and some people want to get in the game. So it got quite big as well alongside Mt. Gox. Definitely not Mt. Gox scale, but got quite big as well. BitInstant, one of the famous crypto exchange, take cash for your dollar, take dollar for your to give you Bitcoin. Bitcoinica is a Singapore product. One of the early exchange that allows you to FOMO your money away. So it has crazy 100 times leverage for Bitcoin trading. One of the first one that allows leverage trading on Bitcoin. It's not a Bitcoin, so there was no other cryptocurrency in the early days. So everything was on Bitcoin. And yeah, DeFi begins to be. So what's the common trait of all these sites that we talk about? So financial transactions, centered around Bitcoin, payment, or as transaction settlement layer. And the key thing is they are peer-to-peer. So you are trading with someone else, you are playing a game, or it's direct you and the other person using a world decentralized currency. With a system of third parties, because you need a site to make you with someone else for discovery of your traders and all that, and also for escrow. Like if you buy something, the site will put it as an escrow, and then trade with the other party. So Bitcoin creates a financial system but it still requires a third party to facilitate that financial transactions. So regardless of all of that, this is the first time in the world that we have a free money. Free as in speech, not free as in beer. So free as in beer is just without payment. This is free, it's free speech. So free as in speech money in the world. That was the first time we had that in 2008, but around 2010, I think that got pretty widely used among some community. So let's jump 5 years ahead. So I Googled one of the top tracks. Again, same guy. I don't know this song, to be honest. Yeah, so 2015. So what happened in 2015? Yeah, money was free from 2008 or around there, but financial contracts are still not free. You still have to use a third-party site to do things. You have to go to a site to meet your fellow traders, and all that. So this is what happened in 2015. Ethereum and Vitalik created Ethereum. That was the first block mine in 2015. He created earlier, but the first block mine in 2015. So this changed the world of DeFi as we know today. What is Ethereum? On a high level, this is what it is: computer as a service. It's a term I coined. I'm gonna not really I coined, but kind of like I think it's an appropriate term. I'm gonna explain a bit what it meant by that. It's not what I call, like in the early days, that was what they market Ethereum as. They don't use that marketing term anymore, like world computer, but in the early days when they first launched, there was world computer. I'm gonna explain a bit why that is, so we all get it. Yeah, so computer as a service. Computer itself, it's a global state machine. So if you transact Bitcoin, you're using Bitcoin as a state machine, right? I'm going to send you this amount of money, you're going to receive it, that's a state. So you're going to write a state and then you're going to receive it. Ethereum is a Turing complete state machine. Turing complete is a term to mean that if you write a software, it can run anything and everything that you write. So there's no limit on what you can do on a Turing complete machine. One example would be Bitcoin has some scripting language, but it's not Turing complete. You can only write limited things on Bitcoin, but you can write generic things on Bitcoin because the instruction set is limited. But on Ethereum, you can do anything and everything you want if you can write smart contracts. So run anything and build anything. So again, so what did people build with that? So I think we all know the term ERC20 today. Yeah, so ERC20 is a token that it was started in the, I believe it's not 2015. Yeah, kind of like started coding before this even came about, and people doing different token standards all over, and then ERC20 kind of like unite all the token standards into one form so that you can write wallets and services that interact with different tokens from different sites in the same manner. So you don't have to deal with this side codes it differently, the other side codes it differently. So ERC20 is the standard for token. It came about around that time that I think really revolutionized. Again, all these are puzzles that defines DeFi as it is today. And what did people build with it in 2015? So DEX in 2015 looks like this. It looks like a centralized exchange that we know about, because naturally the first thing that people build when you have a tool is that you're going to build what you already know. So DEX back in those days looks like this. It's known as Ether Delta, one of the biggest ones back then. It's super clunky to use. You have to put the order book, you have to write it to the blockchain, you have to, if you want to change the price, you have to put in the blockchain, you have to wait for it to be mined. But the one thing, if you think about, that's crazy, Ethereum. If I want to write a price, it's going to cost me so much money. But think back then, it was 2015. Everything on Ethereum is virtually free. You can send tokens to anyone, costs almost nothing. I think Vitalik famously said that if I need to send someone a token, if it costs 10 cents, that's way too expensive. Yeah, look at how much it costs today to send a token. I don't know, like $20 or something on Ethereum. But that was back then. So you can do that, but it's super slow. I don't think I ever traded a single thing here. I did try out like once or twice. It's super clunky, it's super slow. And people usually use it for tokens that are not traded on any centralized exchange. And does anyone know this logo? Anyone knows that? Can you shout it out? What's that? DAP. DAPP. Close enough, but not quite. It's the DAO. It's the DAO. The DAO. The DAO that got hacked. Just known as the DAO, even before it got hacked. Okay, so the DAO, gave birth to two things, two revolutions. ICO, it was probably the first major scale ICO initial coin offering where it takes your cryptocurrency to give you the new token. So gave birth to that. And also DAO as a concept, so decentralized autonomous organization as a concept, meaning code is law. Everything is governed by the smart contract itself. So someone tried to create a organization where we don't have to have like a agreement and bylaws to govern the organization. It's just the smart contract itself is the law. So if anyone wants to withdraw money, you get enough vote, you can do that. You want to spin off a new one, you get enough vote, you can do that. You want to fund a new project, get enough vote, you can do that. So yeah, it gave us to this cool new ideas. And anyone knows what this is? 721. It's NFT. Yeah, NFT again. It's came out about. It got big about 2 years back, but it was actually started around 2018. So yeah, not too far off. But the whole concept started around this one. It also unites all the different NFTs. Back then, it was like all the different standards, and then once this came about, it has standards. So if you want to do an NFT, you use the standard, and major site is going to accept it. OpenSea is going to accept it. And so what it so the other thing is, I think this was a cool concept that also came out around 2016, I think, somehow at that time. So MakerDAO gave birth to DAI, which gave birth to a free stablecoin. A stablecoin that's not backed by any real world asset. Like Tether and all that is backed by dollar. There's some gold-backed token, there's various asset-backed token, but MakerDAO is the first one that's not backed by a real world currency, but backed by a cryptocurrency itself, backed by ETH back then, but now it's by various different basket of cryptocurrencies. Yeah, and there's a new age DEX. So Uniswap, I don't know what year they came out, but it revolutionized also a lot of the DEX usage where you don't have to put in an order book anymore. Everything's automated. You can it's basically just a swap. You want to go from one token to the other, just do a swap, and you get it right away. So it's kind of like see the evolution of DeFi along the way. And this, like, I think around 2018, where some people created a fun thing where kind of started the whole yield mining craze, where I think got a lot of people into crypto. So I think where you get to see crazy yields like 100%, 200% over a year. I think SushiSwap was kind of like the first one that started. It's a very fun thing the way they even named the tokens in the fun everyday objects. But what they do behind it, it's creating of a very interesting way to economics around crypto. So yeah, so 2015 is where VF money is free from 2008, and then 2015 when Ethereum came about, where financial contracts are now free. So anyone can create financial contracts on a blockchain where you don't have to go through a third-party site to do that anymore. So now everyone can trade within one another on a world computer that you don't have to talk to any third-party site or any third party to trust it. So, and that's DeFi as we know today. I think a lot of people, when they think about DeFi, that's what we think about DeFi. That's what we know today. And all rainbows and unicorns with DeFi, obviously. Yeah, so this happened. There's some big DAO hack, and this news this year, but back then was hacked and no one knew who the person was. And now it's allegedly this person. I actually met him in a Singapore Bitcoin user group back in the early days, where it was really small. I think only 10 of us in a scene back in, I think 2014, I think around that time. So a really small group of people just hang around. Yeah, and rug pull is also a major thing that happened in DeFi, where vendor project and then the creator just pull the rug behind you, take all the tokens and just crack all the coin. And some algorithmic catastrophe for a stable coin where Mark Kimmel's was involved in. I mean, not his fault, but I mean, it looked okay before that happened, but yeah, it just got crashed because of the algorithmic death spiral that happened. The Julian covered kind of that as well. We're all worried about death spiral all the time, about crypto, all this algorithmic stuff going around. Yeah, so how about if you want to imagine a new world of DeFi, how about we can have a financial contracts that's not using an all-powerful, all-capable world computer, where if you want to do financial contracts, you definitely do not want to do it on a computer that also someone gambles on it, or someone play games on it and trades like CryptoKitties on it or whatever. Like, you want to do it on something that's more purpose-built for financial transactions. So how about a trustless, decentralized bank for DeFi? So virtual machineless DeFi, if more technical terms for that. So it's a DeFi platform where it allows you to do DeFi and DeFi only and nothing else. So a lot of projects fall into that scope where all they do is just one thing, and one thing really, really good. So Lightning Network is one great example. It's a DeFi platform where it doesn't do DEXs and all that, but what it does really well is allow Bitcoin to transact between one party to the other in a super fast and super cheap way around the world. And it doesn't go to a Bitcoin blockchain where it's expensive and slow, so it goes to its own routing network to do that. The other one is DeFi chain. So DeFi chain does DeFi on a Bitcoin blockchain fork that's very specialized, that's very unique to DeFi only. It doesn't do like, you can't run NFT on it, you can't run a lot of things on it because it only does DeFi and does it really well and really secure. It's not multi-purpose by design, so it only does what is defined and what that's for. So now with DeFi chain, I think with not just DeFi chain, but as a whole, blockchain like this, it's about financial contract as a service. So it's like you take a very generic world computer, now you limit the usage to only financial contract. So that's where I think DeFi is evolving as well in general. And so I'm gonna link to what is state of DeFi today. So state of DeFi today, TVL, 223 billion total value locked. Total value locked, for those of you not familiar, it's kind of like a metric for you to know how much a DeFi protocol is being used by the community. It's more being locked up, you get more usage for the DeFi protocol. So it's 223 billion. That's huge. Back then I wouldn't imagine that it would be that today. And DeFi scan is about 2 billion locked on TVL as we speak, and some of the high yields you can have on blockchain, DeFi blockchain. So you can see some of these like Bitcoin giving like 60% return, and some of the decentralized tokens giving like more than 100%. So high yields, this is why I think it attract people into DeFi. And decentralized tokens, something that's also making a wave these days, allowing some real assets to be traded in a decentralized manner on a DeFi blockchain or on DeFi protocols. DeFi chain is one of them, but there's many other blockchain also does the same. State of DeFi, high yield, widely used, and the cool thing is highly liquid. Because of the high TVL, if you want to move an asset from one another, there's all this liquidity that's out there. You can actually trade from one another very, very easily. You don't have to put an order book and wait for matchmaking, all that to happen. So yeah, should you DeFi? Yes, if you want to chase yield, you want to consider DeFi, yes, but only if you are comfortable with cryptocurrency exposure. Like if you're not comfortable with cryptocurrency, then maybe you want to consider not DeFi. If you're comfortable with that, then yes, check out DeFi. And if you are comfortable with managing on private keys, because DeFi, underneath it, it's still very technical. And I think a lot of people fall into trap where they are not super technical. They get DeFi, they thought like, okay, this is crazy, 10,000% yield a year, let's get into that before it drops. And then go in there and then get a rug pull, boom, you lose all your coins. So you have to be comfortable with managing your private keys. If you lose it, it's going to be able to help you. So you need to know what you're doing. And you need to be able to understand what you're dealing with as well, especially smart contracts. So you need to have a little bit of a technical background. You can get someone to help you there, to advise you as well. You can read up, and if you can't do that yourself, you can trust other people to do it, and you can just get a good sense of confidence that it's quite safe. And I want to introduce as well another concept called CDeFi, centralized DeFi. So if you want to get into DeFi and you do not want to do all the technical stuff yourself, what you can do is you can go into like CDeFi, centralized DeFi, where it's a mix between decentralized finance and the centralized world. So it's a custodian service where you put your money with or your coin with the service, and it will and you can use that to get into a DeFi protocol. So what you get are like customer support, because obviously centralized service curation. So they already kind of do some sort of curation on what you can get into and what you can't get into, and wallet management. So you don't have to deal with all the private keys and all that, like legacy planning. That's always a very, very tricky thing if you manage your own private keys. So suddenly what happened to you? How do you pass it on to your loved one? So if you use centralized service, obviously that's going to be easy. But obviously the downside of all these are the famous quote, not your keys, not your coins. So you have to pick your centralized custodian carefully. Yeah. So some of the example, obviously CakeDeFi is one of the centralized DeFi services out there. And these are the cryptocurrencies assets that CakeDeFi has. The other one is BlockFi. Some of the examples here, so you can just check it out. Celsius, also same thing. So, yep. So I'm going to end it with this. So DeFi, I hope by now you get a sense of how the DeFi evolution come about. And I think that by all of you being here, you want to be part of this financial revolution. So yeah, thank you. All right.
Any questions for
Any?
the speakers? Both of the speakers, no questions so far? No, okay.
All right, I'm going to pass it over to Nick. So he runs the CakeDeFi Ventures. I'm sure many of you need to know what Nick brings.
Okay, this. Okay, thank you. Okay. So this. Okay. Well, Julian and u-zyn are tough acts to follow, right? So I'm glad, okay, just all of you are still here. Just, I'm new to the family, and this really feels like a big family. So maybe a quick intro before that, obviously, right? All your disclaimers. But for myself, spent over 10 years in the games, esports, and all that. So I've also had quite a bit of a diverse career. Spent time with a VC fund, Jungle Ventures. I've family offices, and also in the traditional finance world, I was leading up a practice in Asia Pacific for Visa. Those of you who use credit cards and all that. But every time I walk into the Cake office, right, I'm just amazed at the amount of not just energy, the talent, right, in the office and in the room, right. So besides Julian and u-zyn, whom I work with in the venture fund, right, I also have Jaslyn over there, right. So for those of you who actually are thinking of kind of like doing your own startup or raising money, right, these are Jaslyn will be one of those that you'll be working closely with, right. Yeah, but I wanted to just give a quick kind of like intro on some of the space before I share some thoughts. Right, so I was running Asia Pacific for Sandbox Co. We were trying to put 150 million US to work, backed by a sovereign wealth fund, looking at media, entertainment, games, education, right? And some of the companies that we invested in were like Netflix for kids, Hopster, which we sold to Sony Pictures. We had a tiny board, which is kind of like if some of you are kids, young kids, you might be playing some of the games. I see some smiling there, right? Of kind of like top games in the App Store. Personally, some of my investments I've kind of like invested in maybe at least 10 companies in the game space, developers, publishers, and all that. And one of my favorite for some, I'm not sure anybody here from the local games industry. Mighty Bear is a local game studio. Those of you who've been in Apple Arcade, right? You might have played the game Battle Royale. Right, one of our favorite stuff, I think, is the Coldplay. They were out there one day, kind of like sharing their iPad, and we were like, "Whoa, they have our game, great!" Right? So, one of my favorite investments, right? I've been involved with esports. I consider myself a bit of a native. Both my wife and myself, before we had 4 kids, we were both playing Dota 1 a lot. Okay, I thought I could be pro until I got my ass handed to me, I think the 30th time by Ice. And then I realized that I really cannot be a Dota pro, right? But I went on to kind of like help support a lot of esports events and all that. And I would think that maybe out of the last events I helped to support, including one of those of you might know, Free Fire, World Series, a big game by C Group, Garena. I think out of the last 5 events, we reached a gamer viewership of about 500 million, right? Thereabouts. This is one of the biggest ones, right? Free Fire World Series. And obviously last year, I started to explore, to back, support some of the games in blockchain, NFT, a few projects, right? Including Launchpad as well. Savannah is one of my favorite. I started supporting the project last year. It's not launched yet, so if you Google, you might not find much about it. I like it for the kind of art. I like it. In fact, so basically, you have this animals that has this 8-bit design. They go around from a savanna to Arctic, and end up somewhere in Mars or something like that. And basically, different environments, different worlds. What I like about it, and you'll find this about me. Sometimes I like projects with a good narrative. This I've evaluated maybe at least. Okay, in Cake DeFi Ventures, we've just launched barely 2 months. And thanks to the help of the team, especially Justin, we evaluated 100 projects or 100 startups, right? And quite a number of them are in play to earn games and all of that, right? And I like this one in particular because it's kind of like a strong narrative in terms of working with like wildlife conservation and all that. And I like to work with game studios, right, with a good narrative. So like Mighty Bear has, if you look at the games, very family friendly. Savannah as well is very family friendly. I work with a studio in Helsinki called Heroic. This was in their board meeting last week, and they want to use games for social impact, for good, and these are companies in studios in particular that I like working with, understanding how the founders think. So, given that background, okay, some observations, right? I'm not going to expect a lot of you have spent time in the games industry, but this is some of the prevalent narrative that I've been hearing, right? First of all, there is narrative. Some of you might know this, that the number of gamers in GameFi, in Play to Earn right now is tiny, minuscule, right? Compared to the number of gamers out there, right? Some of you may be surprised if you look at the stats. In Singapore alone, out of a population of 5.5 million, right, we actually have close to 3 million gamers, right, in a sense, right? So in each of these markets, especially in Asia Pacific, you have like a gamer penetration rate of at least 50%, if not higher, right? So in 600 million population, or 660 across Southeast Asia, you have at least about 300 million gamers, right? And if you and kind of like globally, there's millions, billions of gamers, and we're only scratching the surface when it comes to Web3 gaming, NFT, blockchain gaming, just barely scratching the surface, right? And however, when you speak to, I'll use the word traditional game studios. I don't know, no game developer studios here throw bricks at me. Okay, but I think that most of them struggle with Web3, struggle with the idea of blockchain, struggle with play to earn, and some of them not just struggle, they really hate it. They really hate it. I can kind of understand why. You can understand why, right? They feel that, oh, they look at the existing games out there, they're like, are these really games, right? Are you playing first, or are you trying to earn first, right? You can hear all sorts of like, are you play to earn? Is it play and earn? Is it what, earn and learn, or whatever, right? That's starting to move into government narratives territory, right? So, but they really, really struggle. Now, however, having said that, I'll tell you that I can see a bit of a shift in the ground. Maybe even just in my conversations with these studios in the past 2 months, right, I'm beginning to see more and more studios starting to realize that, hey, we have to have a Web3 strategy. We have to do something. The next game we're about to launch, we have to think about Web3. I think that's very encouraging. It was most encouraging 2 weeks back when I was in San Francisco for the Games Developer Conference, GDC. Many of you might know that. And the sense coming out, you know, it's supposed to be a gathering of all these players traditionally in games industry, and it's one of the biggest events. And the sense coming out of that was like, wow, more than 50% of the event was talking about Web3, right? Just because of the conference topic, the exhibitions and all that. So we are seeing start to shift, and don't be surprised if the shift is very, very quick, right? Personally, I feel I'm preaching to the choir here, but I personally have been taken by some of the very inspiring stories I hear for play to earn, right? In a sense, I'm not sure, you know, like a friend would kind of tell me, say, hey, you know, I have a friend in the Philippines. Okay, I'm not sure how many of you here know about Philippines, been to the Philippines, right? They were really drastic in how they kind of like shut down the country during COVID, right? It was something like 9 o'clock in the morning, Duterte goes on TV to announce we're shutting down, everybody go home, and then like 12 o'clock, the cops on the street asking people why you're still home, right? And Philippines is tough to get around, right? You need, and it was really, really kind of like not the best managed, and there were a lot of families that really, really struggled, right? Whether people who passed away because of COVID, or entire families who lost their income. And I hear stories about you know, the gamer in the house took a step forward and started said, I'm going to do this, I'm going to play this game, and started making like 300 US for the family. In the Philippines, that actually may be just enough to feed the whole family. And I would estimate, I'm not sure, I don't have the numbers on the ground, but if maybe not millions of families, but there are like thousands and thousands of families in the last 2 years, their only income came from playing Axie Infinity for the entire family, right? I know some of you are laughing because of what's happening, right, and all that, but just if you think about it, right, in that very tough and dark time, and how play to earn at least Axie for Philippines, and then obviously you know what happened, right? I share this story, and maybe it's fair. 4 or 5 years back, the Philippines was kind of the hub for esports in Southeast Asia. All the biggest events were all happening in the Philippines, right? And I had a bit of time to share this story, right? I went to an event in Philippines, I think this was 2016 or 17. It was a Dota event. There were 40 players on stage. These were like from all over the world, your Team Liquids and all that Dota, right? There were like 17,000 people in the Mall of Asia who bought tickets to pay anything from $10 to $100 to kind of watch these top players play, and it was like every day, and there were like millions of people who watch this event online. That's of how economic works, right? And then I was asked to say, hey, Nick, come and see. We want to introduce you to somebody. So it was very loud, very noisy. I went to a room, and then this young kid come and introduce himself to me. Hey, hi, my name is Baste. It's very, very noisy. Your name is Baste. No, Baste. Oh, Bastard? No, then someone give me a jab. If I say that's the president's son. His name is Baste. I'm like, oh, I called the president's son a bastard, right? Terrible, right? But he was with his dad in, I think his dad was actually with Putin at the time. And he was like, sorry, Dad, I'm leaving, flew back to Philippines to watch an esports tournament, right, at the time. It was huge, right? Esports was huge. Tournaments every other month, events filling up entire stadiums and arenas. Right? It was really, really kind of like taking off in Philippines. And then the government decided to do a very good thing. They decided to make a regulation. They're good and bad regulation. I thought this was a pretty good one. What was it? What was the regulation? Regulation was the Gaming Abusement Board, GAB, said we're going to do dope testing on all the gamers, all the players who want to compete. It's obviously a good thing, right? You're trying to ensure integrity, right? It's a great thing. But the minute that law was passed, I had some friends who were involved in passing the law, it killed the entire esports industry in the Philippines. Why? It's not supposed to be the case. It was supposed to help grow, foster the growth of the industry. It was a well-meaning regulation that was written. Why? Because all the top foreign players, or Team Liquids and all of that, said, we are not flying to Philippines for another tournament because we hear that they have to do a drug test, and then for whatever reason, if we test positive, not that they take drugs, then we might be shot by the president. I mean, gamers, right? They put the two and two together, and it killed almost like immediately had a thing and killed almost the entire industry. Now, in the case of XD or Play to Earn, it kind of was reversed, and I deliberately contrasted this for you. It was reversed because what happened when all these Play to Earn, XC took off in the Philippines? What happened? The government said, we're going to tax the earnings, and actually, it's quite a positive thing if you think about it. Now everybody say, oh, instead of killing it or banning it, now you're going to legitimize it, right? Bring credibility to the activity. So kind of interesting, right? So inspiring stories coming out. There's a sense that there's a huge opportunity for much better game design, gameplay, or narratives, right? In Web3 gaming, Play to Earn. I feel that we're barely scratching the surface. I feel that we're just at the beginning of this, right? I think Julia mentioned just now as well, right? Metaverse, right? So you can buy have it built for $650,000. I remember speaking to one of the industry stalwarts, right? He published games like Grand Theft Auto, and he said, "Hey Nick, why are you talking about metaverse and all that? I launched the world's first metaverse with Grand Theft Auto." Like, you really? You did? Right? I mean, it's like, yeah. Arguably, right, and I think we're all kind of like, sometimes feel like three blind men feeling the elephant, right? It's a different, coming at this from different aspects. But I tend to believe and am closer to how Julian is thinking about it in terms of that, hey, this is still early. But still early, I think the kind of business models, the kind of gameplay of what we're looking at in Web3, in terms of metaverse, we're still early in the curve. So, sounds like a bit premature to do some transporting, but I will try. And maybe 2 or 3 observations. I think I'm speaking to a lot of natives here, and you'll probably be familiar with Immutable X, right? X Populous. Why I highlight these 2 projects in particular is that I mentioned to you the game studios and all that. They are kind of resistant. They're starting to explore a little bit. While they're doing that, the game talents from these AAA studios, they are migrating over to Web3 so quick. You can't believe it, right? 2 weeks ago, I had a conversation with the president of one of the largest game studios in the world. I don't say which one. And he was like, Nick, I need to figure out Web3. I need to figure out Web3 and all that, right? The talents are making the shift. So basically, these 2 projects, Xbox and Immutable X, if you look at the list of talents who are working with them, right? You name it, Riot Games, like senior leadership, Pixar, right? Blizzard, big names from big studios, kind of like senior top guys who've been involved in some of these projects. So they're really making the shift quickly, right, into Web3. And I'm kind of, if you think about their ambition of what they're trying to do, like in terms of the kind of games they're trying to make, right? In the sense of, I mean, there's a common refrain there I always hear from them, right? Almost like tired now. Say, oh, the games that we see Web3 right now so boring. Yeah, like they use the term. So AFK gaming you don't even have to be there to play the game, right? Right? It's quite almost dismissive that way, right? And or okay, SOK gaming, right? Right? Whatever. But yeah, I think the idea is that they feel that there's so much opportunity to build better games, but you have to be mindful. Building a good game takes a lot of time and money, a lot of time and money, and I'm not sure I'm fully behind, or I'm fully, I would say that is the answer, but we definitely are going to see a big shift of so-called AAA gaming talents entering the space, and then studios following and seeing games come there. Will these games succeed? I think we won't know in a short time, because some of these guys, like I spoke to one of them, I said, this game looks really interesting. When are you launching this? In 3 years' time. Right? So you know, that's like forever, right? In Web3, right? What they keep the tokenomics and the hack. I'm not trying to put the two and two together, but I'm just saying that so far in evaluating so many projects, the tokenomics not so interesting, not so. It's a bit like a question about sustainability and all of that, and yet a lot of people back these projects, yeah, and I myself have kind of like supported a couple of them, right? Now this photo I took with my phone in LA last week at NFT LA. NFT LA is one of the events that we actually, or rather we didn't invest in the events, right? But KD5 Ventures, we invested in the company that produced NFT LA, and I was there to see how they would screw up the event, but actually, for a first-time event, they actually did a pretty decent job, right? They didn't screw up. The sense from the industry was really good. And the opening keynote was by Jiho, right? And everything was delayed by 1 hour. When he came, he's like, oh, we just got hacked. Well, actually, it's not true. They got hacked a few days back. That was the time they kind of like discovered and talked about it, right? And the sense in the room, I see was like I was just maybe like 5 meters from him, right? And hearing him talk about this, and then kind of like seeing everyone's reaction was like, yeah, wow, and what is it? What is he gonna say? But more like, will it actually trigger a play-to-earn Web3 gaming winter? Or actually, we are so early in this. Actually, no, right? I think it's an opportunity to look at new, better business models, right? And I am one that. Well, whether it will trigger a play-to-earn winter or not, I think I'm excited to see what are the business models that will come forward. And this is kind of like one of the last thing, and I'll end with this, right? I call them the 800-pound gorillas, right? Your big publishers, your big developers, right? Valve has made it very, very clear that they are not into crypto, not into to Web3 or NFTs and all that. But I also want to highlight, right, games, right? If you look at Tim Sweeney, right, the CEO, co-founder of Epic, he said, oh, you know, just I think this is a few months back, they say, oh, Epic welcomes, right, games is for NFT, and then you know, they launched Ubisoft's NFT game. But just a few months before that, he was saying that Epic isn't getting anywhere close NFT. The reversal was very, very quick, right? Okay, maybe to them reversal, right? I've spoken to some of the executives from Epic, and I say, hey, what is your position, right, on Web3, right? Because you guys own one of the most important part of Web3 and Metaverse, right? You have the Unreal Engine, right? They just announced Unreal 5, in the sense they formalized it, and basically it's not seen as full reversal, not seen as full reversal, but they are definitely right. And this one, right? So sorry, this got cut out, but this is basically TikTok, right? Who owns TikTok, right? It's a Chinese company, ByteDance, right? Right under the nose of Beijing, right? And basically, they took out an ad in the New York Times saying that they support and welcome the NFTs and in a sense, right? So I think those of you, like I said, I'm preaching to the choir, you're natives, you kind of know what's for Beijing on some of these things, but for them to kind of like take such a big open position is, for someone like me who's been in the industry, I'll say, how long will these guys, the big guys, how long will they hold out, right? In a sense, and the question is, does it really matter? Does it really matter? Because if they don't move, the talents will move, right? Then that's the sense that I get. So I think to conclude, right? I think we're still very early, very early in this, which kind of like what Julian also mentioned in terms of where metaverse is. It's definitely a major trend. We're seeing major shifts, right? Moving into Web3 gaming, as we saw in GDC. And as far as my job is concerned, in K-DeFi Ventures is to look at projects, right? So I'm not here to shout out for K-DeFi Ventures in a sense, but for those of you who have interesting projects, feel free to approach us. Jocelyn is there as well, and maybe I'll hand the mic back for any questions. Thank you. Oh, over there. Yes.
Very quickly. First is really, what's really good to drive for games moving to Web3? Other than the fact that it seems like rushing to Web3 because it's a it feels like another silver rush. Is there a need for Web3 right for games? Second, really is for me, but everything while go farming game. This has been around for not just the Philippines, but in many countries around the world will do that. What makes Web3 different, especially when it comes to pay to earn, for example? Maybe it's me, but I really want to say this.
So thanks for those two very key questions, right? When I first got acquainted with the concept of Web3 gaming and play to earn, the first thing I said, I think, to the person who introduced it to me, I said, wow, this is a really tough proposition that you're trying to sell to the game studios and industry. Why? Because if you think about the pay-to-play model, right, is part of what you're referencing, is that the game publishers give you the game, or game developers give the game for free. You play for free, but then you kind of like buy items along the way, and maybe you get to trade it. It depends, right? It depends whether you get to trade it or not, but you kind of like buy items along the way, and all the economics goes straight to the developer. In the Web3, basically what you're saying is that, oh, by the way, that sword that you just bought, that skin that you just bought, doesn't belong to the developer, it belongs to you, right? So basically, it's like, it sounds great for the gamer, but for the developer, now you're taking my one sole source of income, technically, right? In a sense, you are my most major driver of economic value to me for spending all these millions of dollars making a game. You're taking it away from me. I think you're going to have a tough uphill climb as far as that is concerned, right? In terms of, one of the key difference is just what I just highlighted, is that the idea is that you're supposed to kind of like in play to earn or in Web3, right? The ownership, right, of is shared not just fully by the developer or the publisher, but shared with the gamers, and you're supposed to be able to do more with that. Right, that's the thing. Now, what is driving that shift, right? From the studios. I say it's a bit early, but I say the studios are beginning to feel the heat, and I sense it's coming from. I don't want to say it's FOMO. I think it's just from the talents who are actually, there's a lot of affinity between gamers and crypto. If you like, kind of like a lot of gamers, they actually are open, right? Because they are digital natives, and they are a lot more open to buying crypto and all that. And if you are a game studio sitting here, your users, you try to understand the demographic and profile of your user, right? And then you're starting to realize that, hey, my users, actually, a lot of them are digital natives, are crypto natives. And then your own talents themselves are also buying. I can't tell you how many game studio execs I've met who actually have so much of their holdings, millions of dollars in crypto, right? So then you kind of like feel that as the pressure on yourself as a game studio. I'm not sure we're seeing a complete tidal shift yet, but like I said, the ground is shifting. We're beginning to to see that. Obviously, the other thing I would say is that if you're an indie game developer, I'm not talking about the large studios, indie game developer, it sometimes gets really difficult to get your games funded, right? And raising through tokens or kind of like promises, hey, you get to try. And that's one of my concerns, right? When you look at some of these studios, they come out, they raise millions of dollars in tokens. So what have they so far? Like, oh wow, nothing. Right? That's also the challenge issue. I hope that kind of like I'm not sure I fully understood your question, but some perspective on that. Yeah, thank you. Over here.
Thank you for the presentation. Yeah, so this actually is for the whole team.
Oh, okay, Julian.
In regards to it, since you're on gaming right now,
Okay.
For the metaverse, major struggle is being so short of market expectations. So basically, all the games and with no unique proposition. All of them, it sounds like clear profitability for the developers for the fan bases. Yeah, and not so much for the end users. Yes. So that's, my question is then, with so many games around, if we're going for longevity, then perhaps, what is the longer term plan for games, okay? With the main audience out there, ever growing. And then we are talking about, I appreciate your presentation of Bitcoin. If we look at the spirit of Satoshi Nakamoto, the mission is actually to really DeFi. Yeah. And if we're pure in this mission, then with all these impurities that come in, the vacuums and all that, what is the mission to keep this project and this business of yours pure in its intentions? Or are you, or is your longer term vision just to provide this platform for as many, for the proliferation of like whatever the case? Do you understand what I mean?
Sure.
Very good.
Okay. So to repeat the question on the vision of my again, the most popular opinion on that, but I think that 90% of people will not be able to deal with full decentralization because full decentralization is only show this video at the end where and I'm sure you all know this video where this person is in this hotel room, he's split naked, he has this tablet with food that he just finished, and he goes outside and puts his tablet on the floor, and this door closes in the hotel room, and he's completely split naked. He can't get back in because he doesn't have a key card with him, and then he kind of walks through that hotel like with this tablet in front of his private parts, and he gets into the elevator, and then there's like a kid in there and totally freaks out because he's completely naked, and then you see him running through the reception to get a replacement key card. And the reason I will share this is because, I mean, in full decentralization, you're on your own. And I think what Satoshi's vision is to have an option to escape the centralized system. I highly doubt that 95% of people actually will be able to do this on their own. I just don't see that. My mom owns Bitcoin, but she owns Bitcoin because I helped her owning Bitcoin. and I don't know, I don't want to pay customer support for 60 of my family members. I'm okay with not calling my dad. And so for me, that vision, that's to be honest, it's exactly what we're doing here. We're doing this here, and maybe in closing, I want to share this. Right? Pre-COVID, we had these meetups on a monthly, almost on a weekly basis, and I would love to get back to that. Completely from a spirit of sharing ideas, sharing thoughts, and hopefully next time we're gonna get. And I know that there's many other crypto companies here today that we can do this in a collaborative way. We just wanted to lead the charge because we felt we want to get back to what we had pre-COVID. And we need to do it post-COVID. We need to get back to that. We need to get that spirit. We need to have. Singapore cannot lose its hub as a crypto hub in the world. You see Dubai coming up. You see London going up. You see Miami going up. Singapore is not allowed to lose that. And how are we going to make Singapore not losing that? Is by sharing ideas. debating ideas, discussing ideas, having these thoughts here. Right? And that is to me where this video started in 2008, how we spread that word onwards. But I'm fully aware that probably 95% population, they will never be able to do this without hand-holding from centralized companies. That is my full conviction. And still, that means we need to do exactly that in order for the 5% to have this idea sharing and then coming up with fantastic solutions, how to help the other 95%. I hope that answers the question.
Yeah, thank you. And at the same time, maybe on the other side of the perspective, it's actually out of the cryptos out there, tokens out there, 95 million make it.
Sure, but I mean, you're right. I mean, 90% will not make it, right? That is not different than any startup, any project that gets started. I don't know. I don't think that there's a difference in crypto. Probabilities are the same to traditional startups. To traditional games, I don't know. 99.9% on the apps, on the app store, will never make it. So I think that's completely normal. And that's I think a good point. Just because a game catches on with the community because there's so much hype and FOMO around the token or something, doesn't mean that at the end that game is attractive to keep people. I don't think that changes.
Yeah, but if we build a community that is really solid in its foundation, then perhaps they will keep you on with mass adoption better because there's more trust.
At the end, a good game, it still needs a game. You can have the most fantastic community out there. Let's use the example of Bitcoin. If Bitcoin wouldn't solve a problem, you could have the most sectish, the most religious, the most whatever, fanatic community. You could have the most toxic Bitcoin maximalism. But it only works because Bitcoin solves a real world problem. And if that game is crap, you can have a super hype community, but it's going to disappear because there's nothing to really kind of get it. So it needs good, it always needs good, and then around a good project, you can build a really fantastic community. I think that's in anything. Yeah. Last point.
The fact that between a normal gaming company as well as a crypto gaming company, right? The gaming company is you do not know who they are. There's a lot of anonymity and also a lot of possibilities of luck too. So I've invested in 25 over crypto games and stuff like that. I mean, I'm part of launchpad and stuff. The question is, a lot more of this in the real world. You actually see the people, you actually know that they actually have office space, you actually know that there's somewhere no companies can guarantee you that they'll work right. But at least you know that there's somebody there who's actually running something. Here in the crypto space, everything is anonymous. I mean, they can choose not to even tell you where exactly they are located, get the Ethereum address, and say, hey, give me your contributions, we are rolling this out. You can pay a graphic artist thousands of dollars.
So what's the right way to do it in your opinion? Is the right way to have a more structured forum where everyone is known, there is no anonymity, and it's more structured, creativity is a bit stifled, or is the right way to go full open, no limits, full freedom?
I would think between a balance between the two. I mean, look at it. We want to leverage off this market crypto space, but at the same time, we want to have certain at least confidence that we are somehow what they say is somehow being able to manage by smart contracts and stuff like that. Today, we look at it. Everyone is just saying that look, invest the thing. We'll let you know how you're going to put into the liquidity pool when the token launches. But there's nothing really there to tell you whether look,
I agree with you. Maybe I can give you just a 2 cents, and it's some food for thought maybe to go home with. There's a really good podcast. Mark Zuckerberg is a bit on this brand new tour right now where he goes to podcasts podcast to podcast, and obviously you get asked a lot of difficult questions around censorship. And I think crypto is a very interesting topic. And I think an interesting question is censorship good or bad? Most people will immediately say censorship is bad. Great, let's think of a world where you have zero censorship. Let's think it through in blockchain, right? That means you have billions of tokens that get airdropped on a daily basis. You go on your Ethereum address, whatever, every day you're being airdropped tokens. If there were no listing, no sorting, no authority, or no exchange, but it would just be all same level, it's the same as when you go on social media and you have millions of spam bots tweeting, posting comments, and so on. It would be absolutely unusable because we're humans, we're not machines. So we immediately come to the conclusion that this is not good. So a complete chaotic, anarchic system, despite whatever the crypto maximalists, the decentralized maximalists vote for, actually not. So we need some censorship. We need in gaming, we can't have the complete chaos, but we also cannot have those three companies that dictate what everything's going. So what you really want, and now comes this huge debate, right? And we have seen this over the past 2 years. We have seen this with COVID, we have seen this with vaccines, we have seen this with bring up any topic, and we've seen this over the last 2 years. Where draw the line? Where's the line of censorship, right? It's a super, super, super difficult question if you actually think it through. Because those people that say, oh, no censorship, they actually haven't thought this through. Someone that says, oh, gaming should be completely open, you haven't thought this through. If you're those that say, no, 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 full censorship, everything is like just one voice that matters, you haven't thought this through because it completely stifles innovation, it actually stifles good decision making. So the real tricky part, especially in our ecosystem, is this kind of fine line. And I think it's like a pendulum. It always swings back and forth. Sometimes in gaming, right? To talk about gaming, we go a bit too creative and too crazy, and people start investing into things and people lose money, and then it swings back again. It goes into, okay, now it's too boring, too little creativity, too little experimentation, right? It doesn't allow those indie game developers to really foster. So that is maybe a really good thought to kind of go home with, right? Because I always think that people go home with, censorship is so bad. It's incorrect, right? Censorship is absolutely essential. It's too much censorship that's not good. And I think in crypto, in so many things, you have so many libertarians. I'm a libertarian by heart, but I also know, man, without rules, we have this anarchy, and it's just going to be a nightmare because we're humans. I cannot look through millions of spam comments to find the signal out of the noise. The same with games and so on. This is the ultimate question, right? And yeah, so.
Maybe I feel like Julian has helped to answer half of what I was going to say, but he used the word censorship, right? The reason why I highlight the 800-pound gorillas is they provide a bit of a gating function sometimes, right? There's a reason why they are 800-pound gorilla in the games industry, that they provide some kind of gating, that they have repeated ways to get hits and all that. A lot of people describe the games business as hits-driven, like Hollywood, right? How do you get the next successful film? And that's a problem, reason why it's difficult to invest. Now, besides the function of gating and helping to kind of like filter, one of the things that these big studios and publishers they bring about that discipline of how do you repeatedly make games that are successful. Actually, if you look about it, it looks like it's art, but actually there's tons of science behind making good games. And I think one of the reasons why I have a lot of questions around the projects that we see right now in Web3 is that there's not enough, they don't convince me enough of the discipline or the science they bring to the approach, right? When I invest in a traditional game studio, one of the questions I say, okay, if you're raising X dollars, and right, how far will this take you, right? And it will convince me and say, oh, we're going to take this along a bit and then we're going to raise more money. And I said, if this game tanks, you're gone, right? I prefer to say, okay, if what's the science, what's the discipline you use, and they can really break down the process. Each of them are different depending on where they come from. The kind of process they use to decide. There's a studio that I look at. They make a new game every 2 weeks. They're a small studio, 4 men, right? But the thing that I said, why so fast? Not 2 weeks, like 4 weeks, right? Why so fast? I said, yeah, we do a quick MVP. We quickly test it, and then we see how it tests, and we quickly change and pivot, right? So I said, okay, that's interesting, right? Because they're not married to your ideas. You follow what the data is telling you, and then my question on that is then, how much are you raising? How many bets can you take? right? In a sense, sometimes it's like that. But with these studios, I found that you didn't have to take like 5 or 10 bets to get success. Normally they get it second or third time, right? In Mighty Bear's case, they got it the second time. So in a way that there is a certain discipline, process, and science, and which is why I wouldn't fully write off the big game publishers or studios in Web3, right? When they come on, they do bring a certain discipline, science, and or even have to the space. And to the earlier question, right, about there are not many gamers in the metaverse, right? But I'm actually in agreement, right? In agreement that, which is one of the charts I showed earlier, that there are not many gamers in play to earn right now as compared to the rest of the games industry. The challenge, the struggle that we have right now in the industry is that what's the motivation, right? When somebody plays a game, when somebody sits in the train and plays Candy Crush, he or she may not see herself as a gamer, right? He or she is just say, and what's the motivation for you sitting down there playing that game? It's just passing time, maybe a bit of escapism at best. But you say, are you a gamer? Most of the answer is no, I'm not a gamer. Right? I can tell you almost 10 out of 10. If you ask somebody sitting in MRT playing Candy Crush, are you a gamer? It's like likely no. But with play to earn, sometimes we take things very seriously. Like, oh, you come in, it's like a job, right? I remember there was somebody from a government office, I don't say which government office, came to me and said, hey, Nick, do you think there's a future where Singaporeans will be, this is maybe 5 years ago, where Singaporeans will be playing games full time just to, wasn't even play to earn, this was pay to play, right? Where 20% of the people playing the game is paying for the careers of 80% who are playing, right? Is this a realistic future? Is this a realistic job? Is this a realistic scenario? I said, I don't know. Maybe, and at the time there was no play to earn at the time. If you ask me where I think things are going, I'm not sure, right? I'm going to place a bet. I deliberately not mention companies or games that I think would be interesting or take us forward, but I say that the verdict is out there. You will hear about it when we announce the investments that we make. Okay, maybe. In terms of if you see us kind of like betting behind a project, then I think you kind of like sense that maybe we think they might be the game or the model, right, that might be interesting for future. But I think it's still, the sensing is that it's still a bit early. They're not enough. Right now, there's a lot of I won't say uncertainty, but there's not a lot of projects that we've seen that we think can take us clearly into the future at the moment.
With that, we need to close
Okay.
at 9.
Okay.
So, can you say a big applause, please, to Sylvia and Letitia? Thanks to Secretary President to Russ, so thanks to Sylvia for all this. We're going to try to do this almost on a monthly basis, so I hope you come again and we try to have a lot of idea sharing. Hopefully, some of the companies that are here, you're going to want to tag along, and yeah, we can kind of get the spirit of Satoshi going. Thank you so much. Have a lot of fun.
Also, we are always hiring, so do check out our career page. We are always hiring.
Thank you. Smallest.